Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. Woo-hoo, party! Actually, it's really nice to see a lot of the little ones are perking up, and people are posting that they are getting fills on profit orders heading into this little rally window. So, way to go, everybody. Bitcoin's caught a bit of a bid, so that's always encouraging. And adults are dying 1,000 deaths, getting killed in the stock market. Yay! It's a win-win for everybody at TRI. The good part about it, of course, hopefully, is that we're giving you a nice little roadmap. I don't think anybody at TRI should have it, be surprised that the stock market's in a bit of a trouble these days. Salmon. Right on, Rob. Interestingly enough, though, actually, I even tweeted it out just a few minutes ago. I kind of like the idea of Bitcoin being a leading indicator in our economy now. And, I even tweeted this out just a moment ago, wondering whether, Bitcoin topped and the rest of the market had to sort of play catch up here. The semis broke, and then the stock market, the grown-ups and all them, they finally broke. But interestingly, on this sort of big panic dump here in the stock market, and you can see these guys are still very unhappy, Bitcoin's actually catching a nice little bid here. Probably a little too early for us to, be calling bottoms and this is it, no more down. But nonetheless, it's very encouraging to see a nice uppy Bitcoin market here. As well, we see a number of public figures now seem to be coming out and suggesting maybe a turn is close, but who knows? We'll see how it goes in Bitcoin. And then also, too, I thought it was really interesting, like following Sens and Dav's and Sjord's project, the Kairos signaling system on the site. We had just a whole bunch of little altcoin Davos fire over the past day or so. So if anything, it almost feels like either it's a short covering rally where people are just, let's get out of these shorts and book profits because we don't know whether there's a hell of a lot more to go to the downside. Or actually new buying coming in. We're actually seeing some pretty heavy volume on some names, so that's always encouraging. But we'll see how it goes. Slow and steady wins the race. And if anything, this is encouraging that 2018 has been pretty much a shitty year, eh? So we're finally coming to the end of this. Maybe we can put this crazy crypto bear to bed here, but we'll see how it goes. It's great to see that we have both the mayor of Vienna and actually the mayor, I think, is heading off to Linz shortly. Am I not mistaken?
Yeah, that's right. Yeah, having a family Christmas at the hometown, I guess.
In the Austrian countryside,
Yeah.
sleighs and all, but the only problem is there's no snow.
Yeah, well, there still is, but it's gonna melt away.
Oh, boo! It says boo. So, and it's interesting. Alex and I are both sort of nursing these colds that we picked up in LA. Thank you, California, jerks. But I can already start to feel that it's waning. It's been basically 1 week, so I probably sound the worst. Usually that's what happens when you're sick. You sound the worst at the end of the cold. So I might be hacking and wheezing and blowing my nose and all that kind of fun stuff. Bear with me, everybody. I apologize if it's too inconvenient. Actually, Alex is faring probably a lot better than me. I don't hear him hacking and wheezing, but he is telling me that he doesn't feel so hot. So, but I think Alex, on balance, takes much better care of himself than I do. But as well as Alex and I limping along here, and Andrew, how you doing? Are you over your cold yet? I think Andrew also picked up the cold. He's all right now. Good. So you young guys, you bounce back so quickly. But we do have another special awesome host here this morning. We've got Mr. Bear in the house. How you doing, Mr. Bear?
Hey, I'm doing good. How are you? Recovering? You are. That's good to hear.
Well, hopefully all of you guys got to watch the show last night, the Coinigy show. And ironically enough, my biggest job right now here especially for our community specifically, but also for the public, is somebody's got to be a goddamn PMA sort of cheerleader here, right? And try and just put a positive spin on things. Don't get so wrapped up in the bear and the negativity. Nobody likes to see their accounts just floundering. Don't get me wrong. But, ironically enough, I haven't actually done a heck of a lot trading-wise in 2018, just waiting for this silly bear market to play itself out. So, the account's down, but they're just paper, right? And if the market comes screaming back here, then those paper losses turn into paper gains. So, I try to stay as positive as possible through all of this. And of course, your trip to the UK and you reporting back that you had a great time and the UK people had a great time, that always puts a big smile on my face. So, really my big job right now is just to be a nice cheerleader for you guys. Slow and steady wins the race. We've been through this before. It's business as usual. Nothing really new here. Let's just stay focused. And when the market turns, get ready to make some money again. So. But when we do have the bear on the show, he does such a good job of sort of keeping us structured. And okay, first we got to do this, then we got to do that, then we got to do that, then we got to do that. So, and of course, if Brian is left to his leisure, I'll sit in here and talk about being sick for the next half an hour. Boo, hiss, hiss, hiss. Come on, let's get on with the analysis. So, Mr. Bear is here. Mr. Bear, where do you feel like taking us this morning?
Well, we'll pick up where we left off yesterday, in that we were waiting for the Fed to make its announcement as to what their guidance would be for 2019, and of course as well whether or not they would raise interest rates during their meeting. And they did decide to raise interest rates, which really wasn't a surprise. However, what I think the market took as a very negative sign was because the futures markets were pricing in what would be the equivalent of one rate hike for 2019. The Fed's guidance before yesterday's meeting was essentially that they planned to raise 3 times. And I think the market was hoping that they would come out and say they would raise once. But in fact, they decided they were going to be raising 2 times in 2019. And the market didn't really like the tone that the Fed took. And I think that all the theatrics that we saw between Trump and Powell over the last month were really just that. It was a game, and the Fed did what it wanted to do at the end, which, I mean, is it a good thing or a bad thing? The market's perceiving this as negative. You're seeing yesterday we were up 300, we were down 300. Today we're down about 360 odd points right now. And the market just is, there's no, I mean, everyone's looking for a Santa Claus rally, right? So we're going into Christmas here.
No Santa this year.
Yeah, I mean, the Trump presidency is bringing the coal here. And I mean, maybe it's the Fed too at this point. But there's no doubt about it. This market is very heavy, has continued to be heavy. And arguably, some people on Twitter are now saying, there's this guy that I follow. It's a pretty interesting dude. I'm not sure if he is working for an institution right now, but his name is Charlie Bellowy, or Charlie, let me see if I can get this right, Bilello? I don't know how to pronounce his last name, but I follow this dude. He's a really interesting guy. He's been tweeting out all kinds of cool and fun charts. And today he said, it looks like he's seeing some panic selling and capitulation on the S&P. And this is, I can't tell, is this a daily? No, this looks like an hourly chart, I suppose. So he's pointing to this being a potential capitulation candle. There looks like there's a bounce here on his chart. I'm not seeing that right now in the market. He must be seeing something a little bit different, because you can see the S&P is still down about.
What's the timestamp on his chart there? I think probably came in a few, what does that say, 11:56 a.m. on December 20th.
Yeah, so that was 14 minutes ago.
Oh, really? Just pretty recent, eh?
Yeah, so I think this is...
I don't know, man. Where's our crazy Dow S&P? Yeah, well, you can see there's a little bit of bounce off the lows. Okay. RSI on the Dow has actually gotten into oversold camp. I don't think we're there yet on NASDAQ. And interesting. So RSI on the S&P 500 is also actually, that's interesting. Check that out, guys. We actually just came into an AB equals CD price objective on the S&P 500. So I actually that's not a terrible idea what he's talking about there as some sort of pivot here. That wouldn't surprise me.
Yeah, I mean, most of the, can we call them the adults, are getting ready for their holiday break. So any kind of panic and real market moves at this point through arguably the middle to end of next week, and the market's really not participating as much as you would anticipate it doing. So I think today is cleanup after Fed Day, analyze what the plan is, how are we going to set our guidance for 2019, let's square away a bunch of positions, let's see if we can get ourselves positioned for the start of the year. And I think that's what's happening right now is, you know, the real reset button is definitely being pushed right now. And the question is, how are people going to handle this going into next year? And right now the tone is just overwhelmingly negative. And when everyone is like that, you see market states tend to, you know, maybe counter trend rally. And while looking at present action, this doesn't look like a counter trend rally, at least on a daily. And then if you look at the hourly, you know, there's a little bit of a bounce, but like Brian just said, I mean, we are into objective. So we'll see what happens coming into these levels. The dollar, I want to jump into the dollar if that's okay. Just take a peek if this thing actually ended up closing. So we do have confirmation from yesterday that this trend line is broken. And it looks like today the dollar really has broken down just from this tail here. We've busted a bunch of these lows for the end of December and most of December and the end of November. So we're going to start.
The yen is just flying here.
Oh, yeah.
Yeah, well, I don't know. You can see my screen here. I thought that the yen would probably, you know, roll over. But geez whiz, that damn yen is on fire. And what's really interesting is through into the 2007-08 financial crisis, the yen just went on an absolute tear as people. Hey, Axel, yeah, I was wondering where you were. As people were sort of losing faith in the Fed and wondering whether they lost control of the market, and people piled into the yen in big time, right? Like, in fact, actually, we should probably just zoom out and show everybody. Where the hell is that? That's way back here. So here you can see can you see the 2007? You know, this was actually the top of the market, and you know, 2008 was the financial asset crisis. But look how the yen just, you know, it broke out and then just, wow, what a brilliant, you know, just insane rally. So I wonder whether the market's trying to get ready for something like that now. I don't know. I honestly would have thought, especially with the Fed saying that they're going to continue raising, I would have thought that the yen would roll over, but gee whiz, it's just on fire here right now. So interesting comments there in the US dollar index. As you pointed out, it looks like it seriously has lost that trend line. And now how deep do we go here? There is 38.2. So actually it's interesting how today's low. Can you see my chart there, Thomas? It's interesting how the low into today was a tag of that 38.2. So where do you want to go next? I apologize for interrupting. You were doing a great job there. Yeah, there's your 38.2, eh? Doink.
Yeah, we're coming into objectives. I mean, maybe they need to reset the dollar a little bit before this thing decides to continue moving higher. Maybe also you could do something like an ABCD off of this move here and wait for this thing to reset itself. And this could be our new kind of ABCD objective. But, you know, it's very, very premature to even consider that. But we did have, older ABCD objectives, which were dating all the way back to about beginning of March. And then that objective painted us just to about 100. We didn't quite get there just yet. So maybe just a quick 38.2 test and then rally back higher could be possible. But again, this market feels like it's resetting itself and getting ready to take a decisive position going into 2019. And then, of course, as the dollar loses its luster, gold comes out and breaks out above 200-period moving average and is now testing the 50% level. So, I mean, I don't know if we want to spend a lot of time going through those gold stocks, but gold sure went on a crazy roller coaster ride yesterday, didn't it?
Yeah, well, and that's probably the best word to use is roller coaster. These, you know, the gold stocks themselves up and down like a horse drawers. You know, again, me personally, I just can't justify chasing this market in here. I love the VCIM names. If you can go in and buy little gold exploration stocks into the end of the year at discounts, right? Because of tax loss selling, blah, blah, blah. But, you know, I mean, look at something like this Anglo Gold. Can I actually justify chasing that in here? Ay, caramba. And I don't know, you know, that was the Fed action yesterday, and then they gapped the market open right up at the highs this morning, and now here we are coming back down again. So, you know, I certainly can't be a buyer here. I can't. I'm sorry. I just can't. But at the same time, too, you know, I definitely don't think it's a good idea to step in front of this thing and short this stuff. So I just have to sort of be a spectator at this point. What was really interesting, you know, I suppose just to get a general proxy on what the gold market's looking like, you know, we ought to take a look at these gold stocks. And the XIU, I mean, this thing's just all over the map. You could argue that there's a massive megaphone working here, right? So, you know, maybe we have to come up and tag there's 61.8 for the range of the gold stocks off of this market structure top. And, you know, megaphones, right? I suppose we do have a smattering of an uptrend line here that's going to help support the market there. So, you know, if I do get a pullback on the gold stocks back down into sort of these ranges, and probably should update this as well to there. And then our reload zone, I could probably think about going and taking gold long shots somewhere down in this area, especially that gap right there. So, and then you look at today, right? You know, let's see. And actually, this should be an interesting trivia question. Who can tell me what candle pattern this is? Yeah. What does that kind of look like? Any guesses? It is, yeah, Harami, definitely. If we fail through the bottom here. Diamond, very good, Joshua. Actually, I don't know whether you watched the Coinigy show last night, Joshua, but I gave you numerous shout-outs. Our Demon Gap Hunter. But yeah, I'm kind of thinking diamond in here. Yeah, can't really do it very well. Sorry, guys. Something along those lines. And I don't like trading these diamonds because they're vicious, right? But this is a pivot. And of course, if we go up through the top, then this will probably act as a midpoint of that move. And maybe that makes sense to take us up into reload zones against these original highs, right? There's some gaps and stuff up here to be filled in. But, you know, diamonds, they're a pain in the ass. And frankly speaking, as Andrew pointed out, Harami, you know, like I would, you know, and of course the day's still young. We don't know how the hell this is going to finish. But really, you could make an argument that for us to get direction out of the gold stocks, we're going to have to watch that high closely there and that high there. So there's an inside bar. If we reverse up, then, you know, look for trend continuation, the break of the diamond to the upside. We lose these lows and Harami inside. Interesting, very interesting. This is a Harami bar. And I don't know, seasonally, we're now at this sort of the middle to the end of December. Does the seasonality pattern kick in on the bullish side for you now on gold?
It does. So right around week before New Year's, so just after Christmas, I generally see the market start to pick itself back up off the ground. And right now it looks like it's getting toward the end of its cycle upward. So I'm not really sure what's going on cyclically for gold right now, because as I said yesterday, it seems like the trends and the cycles have changed. And I think you have to pay attention to that, be cognizant of the fact that potential behavior in the past may not necessarily be indicative of future behavior in this market.
What are you, a commodities broker?
What?
Yeah, that's funny that you said that. Past performance is not indicative of future results.
Oh man, I guess I did kind of sound like one of those jerks on a disclaimer, right?
Oh, not jerks. You're awesome, man. You're the best. What it just shows is you're now a gnarly veteran. You spit out the lines just like that. That's great. That's awesome. I mean, the interesting thing is maybe this is a big ass W. I don't know. Maybe. Can't write better fiction than reality. I mean, our job, and I've sort of said this before, our job, try not to get sucked into the business of predicting markets, guys, because it's damn difficult.
Cough.
Sorry. It's damn difficult. And half of the time, the market just makes a monkey out of you. So our job is just to simply roll with the punches. And of course, if you have your setups, then trade your setups and, you know, just live with the results. I saw somebody in the lounge this morning, and, you know, I should give a shout out to you guys, because there was a wave of you that came in through the sort of Bitcoin top, and you're going through your education process now, and it's damn difficult for you guys. Hats off for hanging in there. But you know, I saw somebody actually get a little bit emotionally upset about a trade setup that failed this morning. And I have to remind you guys, you know, we are statisticians. That's what our job really is. You could have the most beautiful setup that just is absolutely perfect, divergent, straw. Look at that beautiful M. Look at there with the 50%. And the goddamn market goes the other direction. And you're just like, you're angry and you're frustrated, and that's fine. You know, vent that shit out on me. But don't vent that shit out on your account. And don't vent it on the market, or the market will just eat you alive. So, you know, if anything, having the TRI room, and I'm talking to a guy who drives a fancy car that's electric. We all know who I'm referring to. I felt a lot of empathy for him, because he's going through the process of learning that you're not going to be right 100% of the time. You got to take the setups, and you got to go in there. If you're going to be a trader, and you got to live by the sword, die by the sword, just make damn sure that your winners are bigger than your losers. That's the key to winning at this game, but you're not going to be right 100% of the time. And as Thomas just sort of said there, try like the Dickens to look at all you guys. All right, enough of the names. Anyway, the point here is try to refrain from getting into predicting markets, because the market will often make a fool of you. I think it's great what we do here. We're sort of like, well, looks like the market wants to do this, looks like the market wants to do that. But at the very most, that's our opinions. And of course, everybody knows what Brian thinks of people's opinions, and even my own. You know, I thought it was interesting on Twitter this morning, like some fucking major news sources coming out and saying, oh, Peter Brand picked the top in Bitcoin and predicted the 84% correction. Well, they failed to mention that the son of a bitch got run over by like 20 times calling the top on Bitcoin and was made a fool of by the crypto community. So, you know, I really don't like those sort of like, hey, he called the top, he called the bottom, because if you actually dig into it, there's usually a lot more going on there. But anyway, that was a rant. Sorry, guys. I went off on a tangent there. So long and short of it here, interesting diamond pattern forming on the gold stocks. I think it is interesting that Thomas and as his seasonality is suggesting that maybe the gold market has turned. The only problem I have with this whole thesis is, you know, gold is ultimately an inflationary proxy. And there's one big inflation vehicle in our society that's just getting absolutely taken apart right now. So it's very difficult for me to get too bullish of gold when I see oil just on its knees and having a really hard time recovering. But that's just, you know, that's my opinion here. And then, of course, you know, we're at the end of the commodity cycle. There's a lot of guys looking for a big, massive rally in gold. And I'm thinking that it's just, there's too many people looking for a bull there. So I don't know. We'll see what happens. I do like the idea that seasonally we've gotten into a window where gold can outperform. I certainly, you know, as I said just a moment ago, I'm not going to be chasing any of this shit. And, you know, if you are a bull, I do like the idea that there's a cheeky little gap down here at, what is that? That's 1224. And I suppose if we do reload zones and that kind of stuff, if you did want to be a buyer, I might be thinking, yeah, that makes sense. So out of 1188 up to 1205, so basically a retest of the big fat round number. If I was going to be a buyer of gold, that's sort of where I would want to be concentrating on. Okay, shut the hell up, Brian. Let Thomas talk. I went on way too far there. Sorry about that.
That's all right. There's a couple things I want to run through here. The VIX somehow made a new high. So this thing went to 29, whereas its previous high was that went to 29, and its previous high was 28.8. So VIX is trying to break out here. That's not a good sign for the markets. This may just be a fake move. We got to wait for this candle to close. And right now, I want to see candle body close above this wick up here. And then, I mean, if this thing really does want to, this thing really wants to take off, you can see where the reload zones are back when the VIX had its big mishap, and you know the inverse volatility index, that ETF ended up blowing up, and it still hasn't come back. I think that's officially been destroyed. And
do you hear about people playing the VIX anymore? Because I remember you used to always tell us stories about, you know, waitresses and stuff playing the VIX.
yeah, I mean, I think as far as I know, people were still trying to play this and they were still shorting volatility. Now they're getting their asses handed to them. I think you were an absolute, let's put this nicely. You were you were not a conservative individual if you had a VIX short going into yesterday's Fed decision. So if you're a waitress and you had your VIX short on yesterday, you're crazy. You should not do that, especially when you're in New York City and you've got all these finance guys, you know, wandering around into your restaurant. Just be like, hey, what do you think about putting a VIX short on into a big Fed decision, especially at the end of the year that could determine guidance for the next 12 to 18 months? I'm pretty sure everyone would look at you like you're out of your mind. So, I mean, it's no surprise that they're trying to run people out of any kind of short that they might have put on through the October time. This really, again, just looks like they're resetting the market, and potentially resetting the market includes this VIX breakout. Now, I've been shut out of this trade every single time, and I'm not even going to bother trying to do anything here because I mean, this is just messy. While this is like a divergence because this made lower lows, there's no real nice structure that's come in. It's very messy and disorderly. I mean, you could argue that maybe you're putting in a little bit of a W, you know, very, very sharp sloping W here, but I'm not doing it. I'm not playing this.
That's gunslinger trading. Very, very difficult.
I
trade. I remember we talked about this, eh? And it's kind of interesting how Brian was going all nutso about bearish stock market predictions at the end of the summer. I mean, if you change that to a line chart, I can clearly see exactly where you were supposed to be a buyer of this thing. Right there. Looks like, in fact, interestingly enough, it's right about your 88.6 level there, that 13.1, eh?
Oh, don't remind me. I was talking about wanting to buy it down there.
Yeah. Well, we all were. And that's the great part about TRI is that we're actually on the right side of this fucking market quite often, eh?
Yeah.
So yeah, we had that, and unfortunately, like you pointed out, the big boys just froze us out of this trade. It happens. It's the way it goes. But at least we were thinking in the right direction, right? And I like that.
Yeah, there's one thing that I do want to mention before we start thinking about slowly transitioning into crypto, and this is a name that I talked about. I don't know when this was, maybe a month ago. We were shit talking Starbucks and how millennials don't really go there as often, which may or may not be true. I got a couple comments that disagreed with me, and they thought that, you know, Starbucks was a strong stock and that I probably shouldn't be shorting it. But I did prematurely take my positions, and I've bought puts probably maybe around here-ish, somewhere wherever this market structure confirmed, or maybe I was early. Who knows what I did? But I mean, this thing gave you so many opportunities to come in on it, and I just sat on these things, and finally this thing broke today. I mean, arguably it broke a couple times, but it really didn't break down until today in this massive gap here, pointing down at 30.
The great part about this is hopefully everybody look at TRI looking at this chart should go, yeah, I can see the short. That makes sense. You know, it's pretty logical. Actually, be interesting. Oh, isn't that weird? You were reading my mind. I was wondering if what the indicators look like. I really like the double top in your Coke head there. Never really did get a Momo div there, right? Interesting.
No.
Did Willie get stupid though? It looks like Willie got stupid.
Yes, this happened. So that was one name. I guess it's probably too late for anyone to get in. This Pandora one, this was another put that I bought. I spoke about this. This hasn't quite broken down yet, but interestingly, the puts are paying out from where I bought them. This is the contract that I bought. I think I paid less than 46 cents, but either way, I'm looking for a 50% tag. You can see Momo's a little wonky. It's starting to break down a little bit. You got some market structure top. This is almost early enough. I think, according to what I paid, it's probably a little late as far as SOF is concerned, especially since this is March and we're now in December, so a little bit late. But either way, I mean, you really just start, and this is what I was doing, is just hunting names that hadn't broken down just yet and buying puts across the board. And now, all the ones that I just bought, those are going down and they're being almost hedged by the puts that I put in into the end of the year. So,
I'll just add, I got to give a really big shout out to Kevin. He was on the site just the other day and he was like, gee whiz, this Chipotle sure looks like it's a juicy short. So hats off, Kevin. I think he said he did short this. Everybody, in hindsight, of course, it always looks so obvious. But way to go, Kevin. He hit that M top and he's making bacon here. So I just wanted to mention that. I haven't done any new trades, either long or short here in the stock market. I've been buying a little VCIM stuff. But I did before, while you're talking stock market, and I wanted to point out that Kevin did very, very well on this trade, and I want to give him a specific shout out. Nice trade, Kevin. Way to go.
Hey, wait a second. Wasn't the UK group the ones that shorted Planet Fitness? And is it just me, or does this look juicy again?
Yeah, it looks like it's getting ready to be hit again, eh? But
look, you got your divergence.
You see the dump there in October. I think that actually caused their options to go to double, and if not, maybe even more than that. So I had strongly suggested to them that they take some profits on those trades, but if they had long dated options, they could be riding the free position. That thing is, whoa, look at that divergence now in there now, eh?
Yeah, I really like this actually. This looks really interesting to me.
So I suppose UK group, if you made money on that last trade and you're thinking about hitting this thing again, it looks like Thomas has given you the green light. So
yeah,
good for goodness. Actually, it's interesting, Axel, that you mentioned that, because I noticed I was reading an article on New Year's resolutions, and they were saying that New Year's resolutions this year have just fallen right off. Nobody's making any resolutions this year. So that's kind of funny that you mentioned that.
Maybe people decided it's a good idea to actually make the change you want to without an excuse of New Year's. So they're actually being proactive about their lives.
Sure, sounds good. I'll subscribe to that newsletter, sure.
This is all.
Long and short of it here, we're technicians, and I think there's still, technically a case to be made. The question I would have is, what do the options look like based on the 52-week range? So last January's low is down there at about $20-30. Yeah, that gap probably is the base to use. And so where's the 50% level off of that January 2018 low? There's probably a bit of money still to be made on this thing. I don't know whether I go all the way that far. Yeah, probably those lows. Yeah. So, where's 50% level? 44. So you can see how what probably is going to happen here is a big old fractal is going to form here, where those lows from back in October are probably going to be key support here now in the short term. That wouldn't surprise me.
I can't help myself, Brian. I'm sorry.
There he goes. And he's off. And he's off. All right. So while Thomas is finding those options, I'll just sort of do a quick update on a couple of tweets that I put out this morning. I had mentioned, and we should sort of keep an eye on this going forward. What is sort of the bear market if this thing does roll over? And it's interesting to see. You can actually see now the 2-year note is actually, the yield is going up well above the 5-year note. So the front end of the curve is now fully inverted. And the long end of the curve, you can see that they're rallying egregiously here. So we haven't quite got inversion yet. Still a bit of a ways to go here. Maybe those bonds continue to rally. I'm wondering whether maybe they need a break. But if the stock market keeps tanking, money will keep pouring into the bond market. So really, that brings us to this question, how ugly does ugly get? If we have an Obama-esque correction, then it should be relatively swift, about, we'll call it, 17 bars. I think that's what the study was here. If this is our top, right? So that would be an Obama-esque recession. And interestingly enough, George Bush Jr. Recession and the dot-com peak, which was a fear greed cycle apex, which is sort of what we're going through now. This was the greed cycle apex. Now we're in the fear cycle apex. There is its bear. So it's an interesting roadmap that we should just keep on our radar screens. And, again, sort of TRI's ahead of the curve, right? We'll start hearing people chattering about this when we get down into these areas. But I think everybody here has got a pretty good roadmap of what our sort of future ought to look like. And so with that said, I still think that, AB equals CDs. I wouldn't be surprised if we have some sort of, play here into the end of the year. And it's good to see that the momentum indicators are now getting oversold again. As I pointed out at the very beginning of the episode, I wonder whether, Bitcoin rallying here might actually be a harbinger that these things will at some point bottom here and start to work their way back up. I love Bitcoin as a nice leading indicator here, which is a bit odd, but yeah, that's the way it goes. So, and then the dovetail here to that first sort of roadmap, does it look like a soft landing, which would be one of these type of moving average corrections, or does it have to look like a hard landing, which was that dot-com nightmare mess? You can see we're fully into bear mode now. We could even have nice counter trend rallies to relieve some of this, but it still wouldn't cause the moving averages to go back bullish. So, those people that are like RRSP, 401k investors like that, buying, the broader stock market, they're on pause right now, and they should just be sitting on the sidelines, just twiddling their thumbs. And this might take quite a while to play itself out. Very much like all you crypto enthusiasts have had to go through a year of shit here in Bitcoin. I wouldn't be surprised if the stock market has to go through a year or so of shit there. So. Okay, that was a little bit of filler. Have you got your options quotes up?
Yeah, they're too expensive. So if you take your $50, your target at $50, or no, sorry, if you buy the $50 puts and you're looking at a target of the 50% level, which is $43 and come on, $43.74. That means you can pay $3.13, and they're currently $4.70. So we're shut out for now. Long story short.
And that's really it. You mentioned on your other put play, the put option premiums are actually going up, even though the stock isn't really doing much, and that's purely a function of your volatility index, eh?
Yes, sir.
And like all the level 3ers, Shane. Let's see, I'm going to put you on the spot today. Do option buyers pay up for implied volatility, or do they want to buy low implied volatility? Right. And all the level 3ers should go, all right, option buyers want to buy low implied volatility. So the fact that the VIX is ratcheting higher here means that the premiums are going up, means, gammas are expanding, vegas are expanding. And unfortunately for option purchasers, that means probably the window is gone. So, all right. In the face of a meltdown, not a good idea to chase level 1ers if you want to practice options information, buying insurance on your portfolio. Go and price what the premiums are for buying portfolio insurance right now. That's exactly what you just did in level 1. And what you should see is that as the stock market panics and the prices are collapsing, those premiums a la Thomas's VIX index are going through the roof. So not a good idea to go and buy insurance now. All right. What do we want to look at next?
I think Alex needs to cue the music if he doesn't mind.
All right. Go for it, sir.
Yep. And here we go. Crypto tastes great. All right.
All right. Thank you for that. So that's
Is that only half of it? It felt like we only heard half of the song.
Well, play it again if you want to.
It's all good. It's all good. I'm just being silly.
All right, let's breeze through the news here. We're starting 10 minutes late, so I'll go on turbo mode. So Coinbase talking about their largest crypto transfers. If anyone remembers, last week we talked about 40-odd% of Bitcoin Cash on the move. Well, this article doesn't specifically detail that Coinbase moved those 40% of all Bitcoin Cash in existence. What did happen is that Coinbase moved, and they have the figures here, 5% of Bitcoin, 8% of all Ethereum, and 25% of all Litecoin in circulation to secure storage. So they were working on moving all these things to cold storage. They talk about the infrastructure in which they've developed to house these physical devices. Evidently, they're using similar storage techniques from bunkers in the Swiss Alps. They're also using hardware security modules. So they're basically, I mean, sure, it makes sense, right? You're going to use a hardware security module as opposed to a paper wallet. That to me would make me feel a lot better knowing that all of the money that Coinbase is holding is not just printed on a piece of paper being held in a bunker underneath the Swiss Alps. I mean, this is just crazy, right?
So, in a bunker on a piece of paper in the middle of the Swiss Alps. Actually, did you see? I climbed to the top of the mountain of one of the Swiss Alps last summer.
Oh yeah, did you see Armstrong over there hiding his private keys underneath one of the mountains?
Actually, is Chris here? Chris Change Society. Yeah, usually he's here. You might have seen him. He was up on the top of the mountain with me. That was a lot of fun.
So this is how Coinbase is doing this. They're basically taking the approach of if we distribute all of our cold storage physical wallets through different locations around the planet. Therefore, we ensure that if one of these is lost, we don't lose all of our coins. That's smart. It's a good, what do we call it? It's like a contingency plan in case everything or one location gets destroyed. At least they have others. And I think they can use the other ones to revive the ones that were lost. So it's really interesting. This is a very brief overview of what it is. There's a much, much longer, more detailed article that omits a lot of specifics, obviously, but is fascinating nonetheless. If you don't have a physical storage device, if you don't have cold storage and you have a shitload of coins and you're keeping them on an exchange, I'll just recommend you watch DaVinci's YouTube channel about maintaining control of your physical Bitcoins. And that actually reminds me of this other thing that's supposedly going on, which is this like proof of keys thing that Trace Mayer's trying to like movement that everyone's trying to get on.
He wants everybody to pull all your coins off of the exchanges, and the exchanges are going, well, that's great, fees, woohoo!
Right. I don't really. It's an interesting concept. I don't think it's going to change. Someone asked how this is going to impact the market. I mean, what do you think is going to happen? I mean, just ask yourself if how many people are really going to participate in this.
If people have to pay money to do this, I don't think it's going to happen.
Exactly.
If it was totally free and free of charge and no biggie, I think you probably could get some traction. But.
Yes, precisely. So that's that. I just wanted to make sure we touch on it. That was the Coinbase thing. The 12 days of Coinbase Christmas or whatever they're calling it. They're launching this thing called Coinbase Earn, and this is centered around the ZRX platform. Essentially, what they're doing is they're letting people learn about how these altcoins work, and specifically it's for ZRX. They want you to learn what it is, and they have all these lessons like, why is the world becoming tokenized? What is the 0x protocol? What's the future of 0x? And if you watch these videos, they're supposed to help educate you, and you also earn ZRX. So they'll give you this in your wallet. They'll teach you, I don't know if they teach you about charting, but at least they'll just give you the chart of what this thing's worth. So you'll earn maybe a couple bucks, I think is what the
Can you put the 1 year chart on there? Let's see what this is like. I think it's a train wreck.
Brian always got to know what the prices is. So let's see, 1 year. Yeah, it's ain't good.
Now that's the chart that they should be putting up to the public.
Yeah. So yeah, if you want to learn how to trade, don't buy tops, and then boom, you just earned a couple 0x. But this is cool. I mean, they're 2-minute videos. I think if you don't know anything about 0x and you want to spend 6 minutes of your time to get I don't know how many coins they're giving out. Let me see if the article actually says this, but yeah, you earn a couple coins, so why not check it out? I think it's a great initiative, right? So many people use Coinbase, they don't know how any of this shit works. They're just like, oh, well, I heard cryptos make me a lot of money. And then, you know, the son calls up and he's like, Dad, so about that money you gave me, I lost all of it. Maybe I have like $1,000 left. And yeah, it's bad news. But whatever it is, the point is that you can now educate yourself as to what this shit is, what it could potentially mean for the future. And I mean, I'm preaching to the choir here.
If you could throw that link in the lounge, I think that would be really nice. Probably get. And if is there like a referral code or something like that, so you can get credit for it?
This is not the right lounge. Sorry, guys. I just posted that in our daily brief chat. But yeah, there's no referral code. It's just watch the videos, learn stuff, earn coins, be happy. And maybe they pump this out for a bunch of the other names because they are listing all these other coins. And thanks for the shout out on the Shultcoin reference. I do agree with you that we need to change the name to make these sound a little better.
You know, the great part about TRI is I think we handle ourselves pretty professionally here. But how the fuck are you supposed to be taken seriously by the adults if you call the name of your show Shitcoin Talk? How is any adult going to take you seriously?
Well, unfortunately, this is the generation you're dealing with, right? You know, while the millennials are becoming adults, it's just like, yeah, that sounds about right. I don't know. It is what it is. It does need to change. I agree, but I don't think anyone has a good.
Did I go too long? I felt like I talked way too much about that last night.
I think it's an interesting point to make. I do agree that if you are going to get, quote unquote, the adults into the space, that is not the right word to use. And the terminology should be different. I think someone in the UK group actually had a really good suggestion. Let me see. Like second class coins was what Sjord called it.
Yeah. I think Dav, he called it like second tier or something like that, you know. And I think that's totally cool, you know, but we need to move away from using swear words in the names of these programs. And I agree with you, right? There are a bunch of, you know, like 20-year-olds sort of, you know, full of machismo, full of bravado, full of testosterone guys, and they love to sort of play like this. And I'm sure they made lots of money through the bull run. But let's maybe as a community try and move forward, right? Move into the next phase of this space. But that's just Brian and old man rants. So old man yelling at shitcoin talk. Isn't there like a Simpsons gif or something about that?
Yeah. So you were talking about this Peter Brandt thing. I found this article, so it's probably the same thing you were talking about. He basically thinks that we're in for a dead cat bounce, and if we do get up there and we don't get past 38.2, then this is really, really bad, and we're going to retrace even lower because of a violation of parabolic blah, 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 blah. And
what I don't like about this guy is he came on the crypto space last year. And he kept calling tops. This is a Sigma move. I've never seen this before, right? No, I got to short this, and the market just kept going higher and higher and higher. And so, you know, I thought it was really interesting. The responses to this tweet was a whole bunch of the, you know, crypto Twitter guys were like, this guy got a name, Peter Delete My Tweets or something like that. Did you see that? He actually had a reference that there's actually a funny name for him, Peter I Delete My Tweets, Brandt, and they were all making reference to that, and I thought that was amusing.
Peter
delete my tweets. If anything, this is the one reason why I don't like to delete my tweets. If I'm going to put something out there, I don't want anybody going, oh, well, this guy's full of shit. He deletes his tweets. He takes shit back. Like, and I've gotten myself into trouble on Twitter for saying stupid things. But I leave it there so that nobody can say that I'm a hypocrite and I delete my tweets. So that's the one thing I don't like about Peter. And if he starts saying here, I called the top and look at me, I'm so smart, I'll call him out on this because, man, I remember specifically through that he got run over day after day after day. But anyway, what's your comment here?
I just wanted to move to this consensus story. This is Joe Lubin here, and he was talking about I mean, I went to go see him speak in June when Julian and I went to the tech conference in New York City, and the guy had all these great ideas about what he wants to do with Ethereum and all these dApps that he's going to be launching. And I mean, Consensus Labs was, and him were probably one of the best funded in the Ethereum space, I believe. And now they're announcing they're laying off about 13% of its staff, and then it says they may actually increase that to 50 or 60% of the employees. So that just goes to show that, you know, even real businesses here that are involved in the space are hurting a lot as the price goes down, and they're just not seeing the venture cap investment return. They're not seeing people coming back yet. A lot of people exited mainly because they lost money, and they're still scared. So I want to jump into technicals because I did see something interesting with Ethereum just now. But I mean, this is just, you know, take this at face value that if you are invested in ICOs or in any of these companies, that you run the risk of losing everything at this point if the price doesn't recover and you don't see new money flowing in, which I don't see happening just yet. So just, you know, I'm sure anyone that's listening to that advisor has heard anything that involves that. They're very much aware of the risks, and they take appropriate steps to make sure that, as we say, they can come back and fight another day. But I want to jump into technicals because we've gone way too long here. And I just want to point out a couple of things. The first is that the short that we were talking about, or at least warning about not taking, actually ended up coming in. Now, the issue, and this is a hard thing to get down. And no matter how long you trade, no matter how damn good you think your trading plan is, the fact of the matter is that when you have a divergence and you have a structural fail, and this came in on Bitcoin as well, and I'll zoom in on this as in the same direction. So you've got this, you know, this is actually much more messy, much messier, but you still have the similarities for a market structure top. You need to be aware that your first stop targets are going to be 38.2. Like if this thing fell like a knife all the way down, fine. That, you know, that doesn't happen that often. When you're doing trades and you're taking trades at initial fail levels, especially on low time frames, you really have to remember your targeting. And, you know, I tweeted out that I was looking for an ultimate test of this trend line. But, you know, what I'm not going to tweet out and I'm not going to tell the public, and you guys are obviously privy to this information because you've gone through the program. You understand how fibs work and you understand how first stop targets work. This was a perfect demonstration of how Ray Barbecue levels work. I mean, just like a right on the nose tag, and I played this through Ethereum. I did not play a Bitcoin short, but this tagged 38.2. And it just didn't continue to go lower. Now, when that happens and then you put in this market structure bottom, that's a bull. I mean, this thing's still going to keep going. Once you see that come in, you got to abandon ship, right? I mean, if you're not watching this thing at 10, 11 o'clock in the morning and you didn't take profits, at the very least, once this happens, move your stop to lock in profits. Because if you don't, you're getting run over here and you're 50% or what 60% winner on your 10x leverage down here now becomes a loser, and that sucks, and there's nothing worse than that. So you just have to make sure that you remember, you know, how these markets function. Now, as far as what we're doing now, I mean, this market's all over the place, and if there's anything that I've learned through 2017 and into the end of that cycle, it's that markets that are running higher will trap bears all the time. And this was a classic 2017 bear trap. Paint the top, looks like we're getting close to objectives. We almost tagged 61.8. We did on OKCoin, on Bitcoin. We completed A, B, C, D moves, and then they're still running the top.
We didn't tag 61.8 on Bitcoin yesterday, though, because I remember we were talking about this.
You're right. So the other exchanges had. So we got really close, right? So, and then Willie was kind of overbought. And I mean, here's the thing, right? You just need to remember that when you see these tops coming in, when you see the divs coming in, remember the market state that you're in, right? So this is an hourly chart. So I really like to look at higher time frames for my reversals. The yesterday's setup was really predicated on this divergence here. That was all fine and good, but you didn't have any more reasons for a trade. And
it
this
was a shitty location yesterday. You know,
that
like I remember this specifically. How you know, on my OKCoin chart, 4,000 was a technical objective of an AB equals CD, and I remember yesterday morning we were saying that we haven't hit Mountain Man there yet, so be careful here, guys. And hats off to you for being nimble and booking those profits on the short. That was a tough trade to take. I personally couldn't take that because it's just not very good trade location for me. But way to go on actually making money on that short. That's a testament to your professionalism. But if anything, I kind of like the idea. Now we've finally gotten into trade location, and all the people that did run in on the short side yesterday all got run over, and so now
and
they're
margin called. And
yeah,
margin called.
yeah, exactly. And now they're dying 1,000 deaths. So now the market can actually top out nice and prettily. But, you know, looking at your 4-hour chart there, do we have structure to work with yet on the short side? I don't know. I think we still got to let this thing develop a bit more.
I agree. I think there's still some time to go. And interestingly, while shorts started piling in here on the short side, they didn't quite make it. Hang on a second. Whoops. Sorry.
If you got to grab that call, I'll just
No. I just pushed the wrong button. So what's interesting here is that I totally lost my train of thought. But the point that I wanted to make earlier about Ethereum is that Ethereum broke out before Bitcoin did. And this was probably the first time I've ever seen this happen, which is almost a full 30 to 40 minutes before Bitcoin moved, Ethereum broke out of its range. So this candle right here, this was 11 o'clock. Bitcoin really didn't break out until about, like, call it 11:30 in the morning, maybe 11:40, so about an hour and a half ago. It's been a while since that happened. Ethereum led this rally, and I didn't know what the hell was going on because I'm looking at the other markets and they're not moving anywhere. And then all of a sudden, Bitcoin starts to move up, but Ethereum had already completed this move. So
wasn't it? It was super cool yesterday how the Kairos actually, and I was surprised. Like yesterday, or the day before, Kairos gave a buy signal on Ethereum versus Bitcoin. So it's fascinating that you're saying that Ethereum actually is leading and running ahead of Bitcoin here. That's very, very interesting.
Yeah, I mean, I don't know what it means, but the other thing that I was trying to point out before I lost my train of thought, which just popped back in, is this, we saw longs piling into this market, or sorry, shorts yesterday. We saw shorts piling into the market, and now we're seeing them getting squeezed. And they're just starting to come off here on the hourly. Again, up here is this is data from Finex that I overlay on a OKCoin chart. So you can see this clear double top in the shorts. People are getting squeezed. You know, if you shorted down here, you're first of all, you didn't take your fib tutorials seriously, and you didn't watch the Coinigy shows. And second of all, you're experiencing massive pain. So there's no surprise that shorts are coming off. They're squeezing them here. I think they need to be squeezed just a wee bit more. Longs are going to come out, of course, and be like, "Oh, it's a bull. It's going to keep going higher," and it may well be. But I think before that happens, we need some type of resolution of this RLZ. And if we just shot like a rocket through here, I would be very surprised, right? You've got Willie and over.
And if anything, that's what the bull needs, right?
Yes.
If we are a bull, this market will just blast right through that previous top. And the fact that we're, stalling up in here. I mean, everybody can see on the left-hand side of Thomas's screen there. Oops, not now. There you can see that M top, right? And if this is a bull, the bull will just say "fuck you" to that M and just blast right through the top there. But the fact that we're putting in shooting stars here in reload zones, I agree with you. I think we still got some work to do. If anything, what I'd like to see here is just a nice sideways consolidation to set up maybe a bullish bot to take us up through that top. But
wouldn't that be joyful?
Pardon me?
That would be very happiness.
Yeah, that'd be cool. I guess the question ultimately is, do you think that, I thought it was interesting Vitalik was out there throwing around Ethereums to people. this project here, here's 1,000 Ethereum, this project, here's 1,000 Ethereum. So I wonder whether we're finally getting to the point where, maybe all the tax loss selling damage has been done, and, maybe we can start carving out a base here. Maybe it's not a bad idea. Anyway, sorry, I'm interrupting terribly. I'll shut up.
No, I think that's really the commentary. I mean, nothing really is that much different than yesterday. It's still, you can't short until the setup comes in, and that's really the story here, is that this thing could potentially continue squeezing shorts because, well, everyone's just so used to doing it that maybe at this point this is that dead cat bounce that needs to come into the market, which we can take from a higher time frame. But I mean, where could that potentially bring us? I mean, you could draw your fibs from wherever the hell you want. You want to take this last consolidation at $6,000, and you want to use this as the bottom at 3,040. Dead cat bounce area.
That's interesting. Look how that lines up nicely. 38.2. What is that? 4,300?
4,400. Yeah.
Yeah, and I'd like that, because it would be, they're going to run the stops against that little M top there. And you can see the profile, right? That would be up against the sort of the top end of this this distribution node. And then, if you did a fib, can you throw a fib off of, let's assume that the top comes in around that 4,300, and then to do a fib back down against the lows. My hunch is reload zone is going to line up with that original sort of little low from the 21st, 22nd of November. And the breakout high there from like the 10th of December there. Yeah, look how that's 61.8, 3,500 area. So if anything, I kind of like the idea of a fractal maybe trying to form here over the higher time frames. And Thomas, he's probably going to be zipping in and out, trading that like a banshee. But an old dinosaur like me, I think I would like to see this fractal form. And then, heading into the new year, the pressure should be off of the cryptos. And if that head and shoulders fractal does come in, inverted head and shoulders, then we could probably have a nice little counter trend rally. I mean, look how big that node is up there at 6,400. That whole valley in there really ought to be filled in.
Mm-hmm. Yeah, I agree. I think that from a daily perspective and looking at the internals here, I think that this kind of reload zone is really important. And I would like to see it function as that reload zone, sort of where we are right now, not necessarily getting up to 38.2. The way I'd want to see it play out, and this is just, wishful thinking at this point, is, clearly we've gone up into 78.6. I want to see this thing come back down and check, these two moving averages here, this 30, which is the yellow, which is curving. Don't confuse that with my ABCD levels, but I want to see these things meet. I want to see price touch them and then continue moving higher. That to me would be ideal, but this is not an ideal world where everything behaves according to the laws of Thomas. That could very much be not anywhere close. But if it did do that, that's my ideal bullish case, where we then rally up to 38.2, push all those stops, and then if this really is a bull, we don't even go back down there and just continue higher and actually get up into these reload zones up here, and there's a bunch of gaps in the 78.6 and the upper 5,000 area. But I think we're a little early to be looking up there. I certainly like Brian's idea of tagging this 38.2 and running these stops and then rolling over, as he indicated before.
Also, too, I might add, my rant about Mr. Brandt aside, I kind of have to agree with him. We could see, we really should see an underside test of that 6,000 level. That's, institutions can't sell down markets. They have to sell up markets. So if we do rally up, interesting on his daily chart there, this 200 SMA, if we do rally up into that area and then put in a nasty M, we could very easily come right back down and actually clean up these lows. Because, if Thomas changes his chart to a line chart, you'll notice that there is no W in the market just yet. That's a V bottom. That V bottom will need to be tested at some point down the road. And if we just go streaming straight up to 6Gs, then put in a nasty M and then break, that level there has got like magnet written all over it.
Why is Sandscript giving us a gap indicator here, right at these lows?
I think that you're gonna have to sort of take this take your mouse over to the price pane and then really expand the range, and you'll probably find that there's a little bit of a hole between those two levels. So where did that bar close, and then where did the next bar open? There's probably a little bit of a gap in there.
Huh. So it's right in here.
The mouse over there. Yeah. What's that closing level? Right. Just take the mouse over to that bar. So that close is 36. 31, 12, 38, and then the next one opened up at 31, 12, 35. So there's your gap. 3 big cents. Woohoo!
Isn't that fascinating though?
Yeah. Well,
right down at the bottom of the range there.
Yeah. So the point that I would just make is Brian loves candle body lows for trade location. I got a funny feeling, like I said, if we just go straight up to 6,000, what I would prefer here is we rally up to that 38.2, then back off, come back down against these lows, put in a nice test of the lows, they hold, and that puts in a base heading forward. If, however, Mr. Brandt's prediction is right and we just go blasting straight up to 6,000, then at some point we're going to have to come back down and test these lows. And, there's no guarantees that those lows are going to hold. So anyway, that's my 2 cents there. So
I like those 2 cents. We're like almost 10 minutes after the fact. But I mean, I know that we had an individual who was upset with their Litecoin short. Do we want to do that? Should we even bother talking about Litecoin at this point, or should we just? I mean,
I think your comment about ETH and having to be light on your toes on 38.2 tags was perfectly accurate. But I'll just simply say, and I talked to Mr. Tesla about this, and if anything, it's good that we have the TRI lounge. If you want to come into the TRI lounge and you get stopped out and go, fuck, just print like, I'm so fucking mad, fuck, and just get it out of your system in the TRI lounge, that's exactly what we're here for. Just don't take it out on your account, right? And put the mouse down. If you get stopped out, you want to punch the wall, great, go and punch the wall, but just don't take it out on your account. Revenge trading never goes well. So that was really the point that I wanted to drive home. I think, I believe Mr. Tesla is pretty solid, and he'll make it through this. And if anything, he even said that, I wanted to just use this as a rant to get out my frustrations. Awesome. Perfectly good. But, we just all have to understand that no matter how pretty the setup looks like, you're going to have setups that fail. It just happens. It is a trader's life. So, but on balance, your commentary about Bitcoin and then Ethereum, probably the same story was in Litecoin as well. Yeah, anyway, that's my 2 cents. I thought it was really interesting, just if you can just take a quick boo at my chart here on the Litecoin. I was watching the MEX contracts, and, we sort of mapped this trade out. And if we had taken this double top breakdown here, interestingly enough, I actually, number one, think that the trade's still working. Whether the market actually hit the 50% level here where you were supposed to take profits, that's debatable. I mean, it was awfully, awfully close. And then the other thing that I'd mention, and I talked about this specifically yesterday, I didn't like the risk reward that's set up on this trade. 1.58 is not enough for me to get jazz, right? Everybody in the education program knows that if I'm going to take a trade, I want to see at least a couple bucks of profit for the dollar that I'm going to take in risk. So at 1.58, I really it wasn't appealing enough of a trade idea for me to actually justify hopping in here. So was the trade a little bit iffy? Maybe. If you were trading things like the Litecoin futures, did you actually have a profit objective hit? I don't know, maybe. So I think really the commentary there, and then of course Thomas's commentary, do you respect 38.2s? And once that level is hit, do we maybe start thinking about moving stop to scratch just to cover your ass? We talked at length, and maybe Mr. Tesla, if you're watching this later on, you might want to start adding in Grimm's and I absolutely love this about this community, is we're all working together to be better traders. And so, you know, maybe Mr. Tesla, we want to start adding in Grim's adaptation of the bot setup, that when 50% of your anticipated move is hit, at the very worst, you just move your stop to scratch. That's fine. There's nothing wrong with that. You know, 66% of the moves hit. Okay, well, now we can start trailing stops, right? Maybe you use a moving average. Maybe you use highs and lows. Maybe you go down to a lower time frame and do the 3 high-low method, whatever. So I think, you know, frustrations are natural, and you guys are still learning. Keep in mind, I've been at this for a hell of a long time, so I sort of make it seem easy peasy, whatever. Trust me, I mean, you see me, I have to book losses on trades. Shit happens. I think that you know, anybody who did take these shorts, you know, and especially if you're relatively new to trading, you're going to have to go through this process of learning what works for you and how are we going to trail stops to try and make sure that we don't get run over if the market violently reverses, those kind of things. And of course, that's the whole point of this education program, is we want to try and work together to try and get through these hiccups. And now, if anything, you know, Mr. Tesla, if you're watching this later on, journal the shit out of this experience. What did I learn? How could I adapt my strategy going forward so that I'm less anxious about the trade? Yada, yada, yada. It's a learning process, and, you know, we all have to go through this. It's interesting. I talked to Dav, you know, yesterday in the Coinigy show. Went to great lengths to try to point out that Dav was a horrible trader when I first met him. And he was extremely opinionated. And he got run over right, left, and center. And then one day he just said, okay, I got to get my shit together. I watched Thomas go through exactly the same process, where he, at just one point, I remember him saying, okay, I got to concentrate on doing what works and getting rid of the rest of the shit. And it's beautiful watching each and every one of us go through that transition. You have to be dogged. You have to want this. You have to put the time and effort in, and it will just click one day. You'll be like, okay, now I get it. And that's okay. It's a process. And remember, just even Thomas, he's been working with me for like 4 or 5 years. I mean, it's not going to happen in just 6 months. I know that you guys want it to, but what usually I find happens is maybe about the 1 year, 2 year mark, people go, okay, now I get how this game works. It's beautiful to watch it happen. So, sorry, didn't mean to go off on a rant there. But that's my comment about the Litecoin trade. All right, I hope that helps. I don't know. Did we lose Thomas? Is he gone? I talked way too much. Okay. Oh, there he is. Are you back?
Yeah, I mean, that's great. Everyone needs to hear that stuff. The only other thing I'll mention before signing off here is that Bitcoin Cash has caught a very big bid here, up about 31%. This thing is
Bcash.
Woohoo. So this thing's sitting at like,
does that mean Mr. Ver won and Mr. SV's gone?
No, that doesn't really mean anything. It's just
okay.
Right now Bitcoin Cash is 190 and Bitcoin Satoshis, can't say that word on air, is $115. So these things are running, and I think that means the bot's probably I don't know, did I get stopped out on this thing? I might have. I have to check to see what's going on here, because this thing dipped pretty far down here into like the $60 mark. So this bot's all screwed up, but of course now it's taking off. So anyway, this is BSV, this is Bitcoin Cash, and that's all screwed up, so can't really see this, but there you are. V bottom, no surprises. This thing will probably end up coming back down to earth again. But man, this thing more than doubled in 4 days. So this was sitting around 80.
BAB, that's the new symbol now for
this is Roger Ver's, and then Craig Wright's is BSV.
Oh, isn't that interesting? So BCH no longer exists?
At least on Finex.
Because it's weird, because I've been following BCH here on MEX. I don't even know if this contract is real or not, but BCHZ18. And you're right, man. Wow, one hell of a rally, no doubt about it. This is now, MEX does everything relative to Bitcoin. So, if anything, I respect Thomas. I like the fact that he, gauges all of his trades based off of cash. But relative to Bitcoin, I think you can see the trade that fired here. I think, it really stupid. Divergence is coming in, blah, blah, blah. Do you chase it here? I think hell no. And if anything, what we want to do now is probably good old Joshua. If you are interested in this, of course, that's a conversation totally separately, whether you want to get involved in this. But hopefully you can see reload zones now starting to line up here. Oh, Jesus, these fibs are forever. Caveat emptor. It looks to me like if you did want to get in on this, I think you're right. Actually, this is kind of a cool demonstration of sort of horizontal support and resistance. So you can see this level is the breakout level. This is the key support previously, and gee whiz, what a coincidence. That's sort of, I like that 78.6 area. But me personally, I'd want to see the market come down into here and maybe put in some nice structure or something. Can't touch this now, in my opinion, but I don't know. That's just my opinion. Okay, we've gone well past the top of the hour. Thomas, of course, brought it again. Thank you so much, sir. You do such a great job with this. Mr. Mayor, what do you think? Have we given these people some good value today?
Yeah, I guess I gotta head bed to back now.
You got to what? Oh, you got to head back to bed?
Yeah.
Okay. You take it easy. Andrew, I don't know whether you're still around. Nursing the cold. I'm nursing the cold. So California got us. But great to hear that you guys, the UK group, had a smashing time, as they say in the UK. Play from a position of strength, everybody. I'm very pleased to see that we've basically worked our way through the crypto bear. I think all in all, you guys have learned a lot through this past year. You'll carry this information with the rest of your life. And the great part about it is that you survived, right? A lot of people didn't survive through this. So, I think we're probably like about 80-90% of the way through this mess. Broader stock market, they're sort of heading into it. And my big question here is, how is crypto going to act through this next recession? And I think that's going to be a really good learning experience for all of us too. So, all right, I think I'm done. So, Mr. Mayor, if you want to take us out of here. Thomas, is there any closing thoughts you had for the community? Nope, sounds like he's done. Oh, there he is.
Have a good holiday. Well, I guess I'll be talking to everyone tomorrow before then.
Okay. So, yeah, we're coming into the Christmas break here, right? Jeez, Christmas is coming awfully fast. So that's going to be on Tuesday is the 25th. I would imagine our daily briefs and stuff are going to be a little bit wonky here over the next week or so. People are going to be on holidays. Just bear with us as we sort of work our way through this. I'll try and at least have something for you through the week. But, if we go a bit on hiatus here for the next week or so, don't be surprised. All right, I'm done. Shut the hell up, Brian. Send these people on their way. Have yourselves a great day, everybody. Mr. Mayor, if you want to take us out of here, I think the only thing left to say is a big bye for now.